Bartos with the Bartos Group of Premier Plus Realty, and my co-host for our housing update, the month of May, Cheryl Stokes with New American Funding. Hello, Cheryl.
Hello, Mary. Happy May.
Happy May. We have a great day in May Day, as we said. We started it. Let's just jump into it, Cheryl, without a lot of pleasantries, because we got a lot of juicy stuff to cover. So as we bring up the slides for this month, there's a few things that are really on the minds of folks right now that are talking to us, and that is what is happening with the proposed tax changes and how does that relate to housing? Well, if you haven't heard what's happening with the proposed tax changes, there's a capital gains tax that is changing. Any household making over $1 million in income, they're talking about changing it from 20% in capital gains, past a 2-year, to 39.6. And that number, when I was talking to my accountant, kind of moves around. We'll talk about that in a hot minute. But the second thing they're doing is 1031 exchange, like-kind exchanges. Will they get rid of that tax benefit? Now, Cheryl, those are two very important things. And, Cheryl, I don't know about you, but you sit back and you kind of go, really making $1 million? Okay, whatever. I only make, 100,000 or 50,000 or some small amount. Except that what if you sell a house that we've seen people that are getting double-digit price increases. So I was looking at a house I sold, Cheryl, it was a couple of years ago. And it's on the market. We sold it for like 700,000 and it is on the market for $1.5 million.
So there you go. Add that to some, employment income.
You're at $1 million. You're in $1 million. The second part of this is for my investors that have 1031 exchanges. I'm moving, farmland, which call it whether you will or not, supposed to, into a condo. I've sold my parents' estates and farmland and I want to move it, or I've sold a business and, I want to move it into something else, or a second home. They're talking about abolishing that tax. And that could
have some implication for sure.
Right. So if you're in those, that either one of those scenarios, clearly you want to talk to your accountant quickly. But two, perhaps it may make sense to sell while we know what the game we're in and then worry about the change. Again, these are proposed changes. Now, Cheryl, why don't you read what Leona Edwards said?
She says, I don't expect the law to impact a lot of people, but selling in some markets could put someone over $1 million in income for the year. And you can imagine what those markets might be.
Right. Clearly, our market could really hit home with this.
Absolutely.
To me, those two topics alone are enough to do a whole, 30 minutes on. And stay tuned, because in Really Mary, if any of you follow me on the Really Mary, I am going to have, a financial planner and an accountant talking about those as it relates from their perspective that are working with, highly successful folks and like many of you that are watching today. So if you're thinking, wow, $1 million doesn't affect me because of whatever, well, it just might be with, housing. All right, so on to the economic news, because there's just so much juiciness that happened, so to speak, right, Cheryl, in the last couple weeks, right?
Even 4 days.
Time morphs for Cheryl.
Yes.
I don't know for you and me. So go ahead and read what's happening with, what happened here with some of the the reports for jobs.
Yeah, the jobs report came out this week, and Bill McBride, the day before the report, said some analysts think this will be a very strong report with 1.5 to 2.1 million jobs added. The Wall Street Journal said U.S. non-farm payrolls are expected to increase by 1 million in April, and the unemployment rate is expected to fall to 5.8 from 6 a month earlier. In actuality, when it came out, everybody was surprised, and only 266,000 jobs were added, and the unemployment rate ticked up a little bit from 6 to 6.1%.
Which is what the chart looks like. So That's scary news that the news is coming out with, Cheryl. Sometimes it's not to clarify, but to terrify. And there's a lot of reasons for it. The question is it a problem?
Well, it's funny that you asked that because I listen to a report for lenders every day, and they have really drilled down onto those inflation numbers. And in reality, those numbers that caused the inflation to look a little scary this week were in 5 markets: airlines, sporting events, used cars, hotels, and computers. And if you think about that, all of that, except for computers, is coming where businesses have been shut down. They're now opening up. They're raising their prices because they're opening up. Computers is microchips, which we're in a shortage because everyone was working from home. But the interesting thing, and this is what I really liked about this report, is that group, although they jumped really high, they only represent 7% of the overall economy. The other 93% stayed relatively flat. So that's a little bit of good news that maybe it's not as bad as it sounds.
Right. And I don't know, Cheryl, again, I don't wish anyone to be jobless, but we are seeing struggles with getting some of the workers back in to our restaurants and places because with the stimulus and their unemployment, they're making a decent wage without having to go back to work. And those were the industries that you were talking about. Are you hearing that as well?
I do. I hear it on both sides. I hear that the stimulus is keeping them away. And I also hear that a lot of those people who might need childcare, et cetera, those industries haven't come back yet. So they can't come back to work even if they want to because they don't have childcare. So we're kind of in this weird section at the moment, I think.
Yeah. Well, the good news is, again, it's April 14th, 2021. And the CDC said that if you've got your vaccine, Cheryl, you and I have, we're not political on this at all.
Correct.
We don't have to wear masks indoors or outdoors. Now, in the state of Florida, we've been pretty much that way, unless the company asks you to, or clearly airlines, et cetera. So hopefully this is going to free up for these, families that need to get back to work and their kids can't go anywhere, right?
Right. I think we'll see changes between now and this time next month.
I love that. So, consumer price index went up to 4.2%, Cheryl. And we've had some of our customers say, well, inflation, consumer price index went up. Danger Will Robinson is there, as the old Lost in Space used to go. Go ahead and read what CNBC said about that.
One big reason for the acceleration was base effects. At this time a year ago, the economy was hit with the worst of the COVID pandemic and inflation was unusually low. It's because we were all at home.
We're all at home, right? And quite honestly, we were at home and not spending a lot of money.
Correct.
Per se, a year ago in May or April, we weren't even sure which way it was going to go up. So, which is kind of interesting. Now, go ahead and read what Paul Krugman has to say.
So the inflation report wasn't a nothing burger, but it was sort of a White Castle slider. Not a very big deal.
Well, if you ask my family, Cheryl, they really like White Castles. We grew up in the Chicagoland area. And White Castles is kind of like, woohoo, we're going to like White Castle. But if you like the big, juicy, yummy ones, not so much. So that was the case. So, did I go backwards, Cheryl? I'm sorry.
You did.
Let's go forward. So NAR, they just released their 2021 first quarter home price report. And, I found this very interesting because prices, metro areas, Chicago, New York, LA, et cetera, where people were said to be fleeing out of their markets year over year. So first quarter of 2020 versus first quarter of 2021, 99% of those metro areas, the prices went up, right? This isn't that they went up by 99%, they went up by 99% of those areas went up in price. And
Correct.
interesting enough, 89% of those same metro areas went up in double digits. So more than 9%, which, is interesting when you consider some of these metro areas were just, people were fleeing. We're seeing that when people move to our area that, they're coming from a state that's a problem, or an area like Chicagoland where we came from. They were living in a high rise and they're like, life in a high rise right now in a pandemic is not so great.
Right.
But that didn't mean that the prices were deflated.
No.
They went up.
No.
It's crazy, right?
The demand is still high. Right.
The demand is high. And Cheryl, if you look at these 4 top financial institutions, JP Morgan, Merrill Lynch, Goldman Sachs, Morgan Stanley, this is what they're saying. So I know I love the way you read, Cheryl. So would you mind reading for us?
Sure. So home buyers, interest rates are still historically low, though they are inching up. Housing prices have spiked during the last 6 to 9 months, but we don't expect them to fall soon, and we believe they are more likely to keep on rising. That's what I'm hearing as well. If you are looking to purchase a new home, conditions now may be better than 12 months hence. Those who remember the housing bubble of 06 and 07 may be nervous watching U.S. housing prices soar now, but the previous bubble was fueled by speculative buying, which we do not think is the case today. And you and I have said that multiple times over the last couple of months.
Over and over and over again, because we're in an inverse market than before. There's no inventory. It had inventory. People weren't really qualified the way you qualify them for loans, et cetera, right? I mean, it's just exact opposite.
It's not speculative, risky type buying as it was at that point in time.
We have one of our viewers is like, no bubble. I love it. Thank you, Hannah, for participating. So let's go on to see what Merrill Lynch says. Cheryl, you've done such a great job reading. Read on.
I'm up again. There are reasons to believe that this is likely to being an unusually long and strong housing expansion. Demand is very strong because, you and I talked about this before, the biggest demographic cohort in history is moving through the household formation and peak home buying stages of its life cycle. Coronavirus-related preference changes have also sharply boosted home buying demand. At the same time, supply is unusually tight, with available homes for supply are at record low levels. Double-digit price, I can't read that word, are rationing the supply.
Sorry about that. That's probably
that's a little exclamation point, but that's exactly what we were talking about. What is the biggest demographic coming into power right now for purchasing? Well, it's the millennials, and they are from 25 to 40 years old, and they are coming into their own with buying power and the desire to set up families, set up homes. If you think about that age group, that's the meat of when you're doing that. And that's the largest demographic group we have right now.
I was just looking, Cheryl, at our list of, Bartos Group team, and I keep their names up here. There are 6 first-time home buyers that bought in the last year on our team, on a team of 44. And some of us, like myself, Joe and I, have been homeowners for quite some time. But those are the millennials that you're talking about, and a couple that are a little bit under that, 25 mark. But 6, that is pretty incredible. So it's spot on. There's another point that's very interesting and subtle in here. It's like, what happened also in what's important in a home, right? So if I'm living in a condo or an apartment and I don't have any outside area or access to things or things that were shut down, people want their own things. And, one of our colleagues, Cheryl, up in Orlando, big shout out, she's recently asked this question of her customers when she calls them, how has these 419 days of the pandemic changed the way you feel about your home?
Absolutely. That's a great question.
Right? I don't care if it's, you've owned your home for quite some time or what that situation is. The point is has it changed? Do you need something different? Are you enjoying it the way it is or not? So, I love that Merrill Lynch kind of pulled a couple of those highlights in there. Now, Goldman Sachs, all right, I'll take a swing at the reading because you've done such a great job. Says, strong demand for housing looks sustainable. Yay, woohoo. Even before the pandemic, demographic tailwinds and historically low mortgage rates, all you, Cheryl, had pushed demand to high levels. Consumer surveys indicate that household buying intentions are now at the highest in 20 years. As a result, the model projects double-digit price gains both this year and next. Excuse me? The model projects double-digit price gains. See, I can't read. That's why you do it all. Projects double-digit price gains both this year and next. And we've seen that. Now, our market sometimes slags a little bit behind or preempts everybody else, right? So when our busiest season is January through Easter, that we've just come out of it, and we've seen double-digit increases. It's just unbelievable, right?
Right. Right. And I think everything supports that it's going to continue, especially if we go right back to that millennial group. If the youngest of them are 25, so in the next 5-6 years, they're all coming into some of their peak income producing years. The demand is going to continue, I think, for maybe even more than 2 years.
I without a doubt. You know, Hannah, our viewer, says, why throw away money on rent when interest rates are, you know, just the lowest they've been for some time, in the game to build equity for the future? That's awesome. So true, right, Cheryl? That's what they're doing.
It is. And even in that earlier slide, you know, where they talked about the interest rates have ticked up some, they have. But honestly, they're still lower now than they were 2 years ago at this time.
Yeah.
So even though they have moved around, even though they have come up from, say, June through September of last year, they're still historically low. And it's still very affordable to get into a home right now. And people should take advantage of that if they have the opportunity, because as we all know, the biggest way to build familial wealth is through home ownership.
Absolutely. And I have many of my clients that said, I've built wealth in a 1031 exchange because I'm not taxing that money going forward. So build your first primary and then think about those secondaries and investments. Last but not least, well, I guess we have a couple more. Cheryl, tell us what Morgan Stanley is also saying.
Unlike 15 years ago, the euphoria in today's home prices comes down to the simple logic of supply and demand. And we at Morgan Stanley conclude that this time the sector is on a sustainably sturdy foundation. This robust demand and highly challenged supply, along with tight mortgage lending standards, may continue to bode well for home prices. Higher interest rates and post-pandemic moves could likely slow the pace of appreciation, but the upward trajectory remains very much on course.
So in essence, we saw some astronomical increases, and that's going to slow down probably. It isn't going to be so if you were thinking about selling your home and you're like, oh my gosh, it's still going to double digit and all, you know, like we get all excited about, maybe it will, maybe it won't. But is it time to take out some of those profits and put them somewhere else? Because, you know, if you've seen some great gains, we know what the game is right now. We know what our taxes are now, what that looks like. You know, proposed tax changes may come into effect. And with that said, you know, another Morgan Stanley guy, Viswanath, if I've pronounced his first name properly, we have a strong conviction that we are not experiencing a bubble in U.S. housing. Cheryl, I can't tell you how many times, and to our own internal side, we're like, oh my gosh, this feels like a bubble. It feels like 2006-07. Like, what is happening? That is not the case. We are inverse to what happened then. We're not at all suggesting that home price appreciation will maintain its current torrid pace. Home prices will continue to rise, but more gradually. So that crazy stint that we just had, which is awesome in our market, where people have seen, and sometimes doubling the price that they bought it for just a few years ago. I have a guy that bought a piece of land, and in a couple of months he doubled, which is unbelievable. But then what? What do I do with it? When can I get a 1031 exchange? And that's exactly what he's looking at, because they're still available. So what's happening in our area in Southwest Florida? Well, this is interesting to me because and it may be hard to tell and maybe not on your screen, but the blue color is April of 2021, and this is total homes for sale, okay? The purple color was a little over a year ago, February of 2020, and the green color is February of 2019 by market. So the first market is Naples, then Marco Island, Bonita, Estero, Fort Myers, etc. So today in Naples, there are 1,656 homes, single-family homes and condos for sale. Cheryl, compared with just 2 years ago, 8,185 available homes for sale in February of 2019. Is that crazy or what?
That's crazy. That is not very much inventory for sure.
It is not at all. And then you look at Marco Island, and I probably have a little bit more insight into Marco Island because we usually carry about, anywhere from 1,000 to 2,000 homes in a normal market, right? In this April, single family homes on Marco, because there's 20,000 doors, condos and front doors, there's 216 homes and condos for sale, Cheryl.
That's really low.
Right? And 2 years ago, it was 966. And then you add land in there, so you're in that 1,000 to 2,000 kind of number. I mean, the numbers are hard to see on this screen because, quite honestly, if you look at it, the Naples, which has much more inventory, is kind of trumping this graph with some of these others. But even if you look at Fort Myers, and 2 years ago, that green line over here was over 4,000.
Yep.
And today there's only 830. So Cheryl, the biggest struggle that we're having right now, honestly, is not prices, because it's awesome and people aren't worried about, are you seeing issues, Cheryl, at all with getting a mortgage? Yeah, they're tighter, but that's not our constraint, is the buyer side. It's the seller.
Right. No, that is not a constraint. People are still borrowing and lenders are still lending, and we're following essentially the same guidelines that we have throughout. So lending is possible. The main thing is the buyers can't find a property, or they go through the process, get pre-approved, get started, and as they're shopping, they get outbid. So it's really that lack of inventory that is affecting everybody.
Yeah, that is the struggle right now. So my question to you, my friends, with this all thought in hand, is it time to sell? Is it time to take the profits out? Is it time to take and do a 1031 exchange? Is it time to go find that piece of paradise that you want? Or is it time to go into a continuing care? Or is it time to move back close to the family in our market? Was your home not right during COVID? I don't know, Cheryl, wouldn't you say that only someone can decide that for themselves?
Oh, absolutely. I think, and this is a common theme that we have been discussing now really since September, is everybody has taken this past year and is continuing to really think about how it affected them, how it affected the way they live, what kind of property were they in, where do they see themselves in the future? And it's time to just kind of reset yourself and plan for what's next. Do you stay where you're at? Do you sell and downsize? Do you sell and take some funds out? There's a lot of decisions to be made, but it's definitely a time that for everybody involved, it's a good time to really think about it and maybe make a change. Absolutely.
Cheryl, as we come to the end of our time, my friend, we just said it. Is it time? We're at the end of our time, but what does that look like for us, right? Is it time to sell? Is it time to move, what are you going to do? Now, if you do decide and you got to buy another place, you want to get a loan officer, Cheryl Stokes, New American Funding is a gal to go to. And we hope that the Bartos Group would be the one that you'd look to buy and sell with as well. But that decision, I'm talking with lots of people these days, Cheryl, that because we're in those investigatory times, like, I don't know, where would I go? Do I want to spend more time with my grandkids? My grandkids are just babies. And we all know that precious time of grandchildren, babies, is when they're little to before they start hanging out with all their friends, right? And people are wanting to go back there. And why not take advantage of this, right? Many have their own homes anyway. Excuse me, Cheryl. So we have another question. You want to read, or statement, you want to read it at the bottom?
Yep, it says, I was reading from Draper and Kramer Mortgage Company that accumulated savings from stimulus payments and reduced commuting expenses could flow into the housing market this spring and summer. That's true. One of the other things I heard on the report today is this last stimulus, all the stimuluses had different effects for people in different ways. Some people were using it to pay rent and groceries, etc. Some people, although it doesn't directly go into the economy, they were using it to pay down debt. Maybe they incurred debt at the beginning of the stimulus and now they're paying it down to get themselves caught back up. And some people are paying down student loans, things like that. So that stimulus is helping them in a number of ways, a lot of which could help with home buying. If you have less debt, you qualify for more in purchasing. Maybe your credit score goes up because you've paid some of that debt, or maybe you've accumulated some of it and that can go towards your down payment. But again, that just says the same thing we've been saying all along. People are rethinking how they handle their money. People are rethinking how they handle their housing. And that's a perfect question for both you and your agents and myself when speaking with clients is, what is your end goal? What are you trying to accomplish? Have you gotten advice from your financial planner? And how can we help you accomplish that goal?
Absolutely. I love that, Cheryl. We're here. We're here to help you through that process and to be a consultant. Whether you choose to sell or buy, Cheryl and I really, and our teams that's not our end game here. Our end game is to help you achieve the next step, or if there's a move in your future. So Cheryl, it's the end of this program of our housing update. I guess it'll be June when we get back together. Can you believe it?
Oh my God, the year is flying by.
Woo! Anyway, we hope to see you. If you have future questions, please go ahead and put them down here. We'll, Cheryl or I, or whoever we feel would be appropriate to answer your questions. We'd love to do so. But until next time, we look forward to seeing you here in paradise, buying or selling, and getting an update on the market. Ciao.